Good day, guys. How we all doing? I hope we all good. It's been a while. I've been away for some time, just sorting out some stuff. But I'm back now. I'm back. Well, I'm almost 100% back, but yeah, I'll be sending some videos through. So I just thought, let me do a quick recap on the trades I took today based on what we read in the Candlestick Trading Bible. So I'd love to know how the whole book is going for you guys. Have you picked up something which you are now familiar with? Are you guys profitable? Are you winning? Are you losing? Is there any way where we can help each other? So I'd love to hear your feedback. So let's see. So today I'm just going to show you the candles. We've gone through this book before, so I won't waste your time. So the main candles we are looking at today will be the Morning Star. We'll also be looking at the Doji, and we'll also be looking at the pin bar or the shooting star. So let's quickly scroll to where the morning star is before I go to the charts to show you the setups. I think okay, so we're just going to do a quick recap of the candlesticks, which I want to talk about today. Then I'll show you the live chart examples and the results of today's trading. So it's raining. I just hope the sound is not messing up this Zoom right now. Okay, there we go. So there is the morning star. Basically, the morning star looks like this. So let's see where it starts. Um, okay, the morning star. So the morning star pattern is considered a bullish reversal pattern. So I'm just going to pinpoint the main knots. This is considered what the bullish reversal pattern, and it often occurs at the bottom of a downtrend, and it consists of three candlesticks. So this is just the basics or the skeleton of the whole setup. The first candlestick is a bearish candle, which indicates that sellers are still in charge of the market. The second candle is the small one, which represents that sellers are in control, but they don't push the market much lower. And this candle can be bullish or bearish. So the color really doesn't matter on this particular candle. Then the third candle is a bullish candlestick that came up on the open and closed above the midpoint of the body of the first day. This candlestick holds a significant trend reversal signal. So the Morningstar pattern shows us how buyers took control of the market from sellers. When this pattern occurs at the bottom of a downtrend near a support level, so these are confluences. When it opens near a support level while as the price is coming down, it is interpreted as a powerful trend reversal. So see the illustration below. So this is a simple illustration. You can see here price was basically pushing down, first leg, second leg. So on the second leg, that's where we get the morning star, and this is the three candlestick patterns. So we've got the bearish candle, we've got the morning star, and we've got a bullish candle here signaling that the trend will potentially change. So if you are waiting for a safe trade, after you see this pattern, sometimes price can also do this. It happens. So if you want a safe trade, if you're familiar with order blocks, you can simply mark your lowest low. You can see that's your order block. So at the break, you can execute a buy here, or sometimes price will push up, then they will retest and you can still execute a buy. So I'm going to quickly jump into the charts so that I can show you guys the example. So the example is on synthetic indices. So the example, these are the assets which I was looking at today. I was looking at Boom 1000, I was looking at Boom 500, and I was looking at C500. So more examples will come as the days progress, as we look into currencies, stocks, and indices as well. But today I just wanted to give a quick example on the synthetic indices. So we're going to start with B1000, maximize the chart. So you can see intraday, basically we're on H1. The price, okay, what's going on here? Okay, the price created a high at the top here, right? And we've been pushing down and almost going sideways, but we can say we were in a downtrend, right? So after seeing this price action, you will notice that my point of interest was actually when I came to the charts today, price was somewhere here before this morning star. So I was actually anticipating a potential touch of the 800. That's why you see I had marked uh and a point of interest right there. So if we zoom in here, let me confirm that we're still sharing here. Okay, yeah. All right. So price came down, and gave us the morning star. So remember, it's three pattern candle, or three candle pattern. So the first candle is bearish. We took out this low. So now you start adding all the confluences you know about trading. So price comes, takes out that low. We've got that morning star, we've got the third candle coming up, and the fourth candle coming up here. So if you're doubting, you simply have to wait for a break of the order block. Like I said, check the trade. Sometimes price will push up and retrace, bounce off that order block again and still push up. Sometimes it will be a straight away buy. So this was the trade, the buy example on B1000. Let me quickly show you, or I'll just show you just now the results when we just compile everything together. Then the next setup was on B500. So B500 is a bit advanced in such a way that here the trend is almost sideways. As you can see, we cannot really say price is pushing up or price is pushing down, but the past 2 days sort of give us a clue of where price is going. The moving averages also give us a clue where price is going in general. So in general, we've been pushing down. So since we're pushing down, usually I only look for buys here. So if price is pushing down, remember we'll only be looking for sales, right? But the reason I'm saying it's advanced because I took a buy into the retracement of this push down. So if you run a fib from this high to this low, you will see that price will potentially retrace into the 38.2% retracement level, or 50 or 61 or 70. Any of those areas price can retrace into. So what made me take a buy here now is I saw price came down after that huge move. I was now anticipating a retracement back into this range, right? So my take profit, as you can see, what I looked for here was just like a impulsive push up. So sometimes you have to just jump into smaller time frames just to run your fib nicely. So if you run your fib on this first impulsive move here, you see that the 50 level is right here. The 50 level is also in line with this level, which I suppose is an imbalance from the H1. As you can see, we had this imbalance. So initially, price had pushed up. We broke a level, left this imbalance here. So this imbalance is a point of interest for me. If price reacts anyhow here, I'll take that buy. So that's exactly what happened. So I ran my fib from this low to this high after breaking this level. So it's signaling a break of structure. And if price shows a reaction in your point of interest, you can take the trade. So you can see we had another nice morning star candle, or you can call it a doji. Then from there, I executed my buy, and I took profit at the first TP, which you see. The reason I didn't hold, remember, the past 2 days were mostly leaning on huge bearish impulsive moves. Moving averages were also pointing to a downtrend. So I did not hold to TP2. I think we took about 40 pips on this trade, if I'm not mistaken, but I'll confirm just now. So this was my buy trade. That was how I was looking at it. So when price retraced into the fib retracement area at 50, you see we had a nice close. I marked it there. Jump to M15, you look again for any familiar candlesticks. If you are not sure, just wait for something familiar, then you can execute your trade. So this was the trade on B5. Then the next setup I had on C500, as you can see. Okay. Okay, C500 again. On this one, we've been bearish. We've been bearish, so this is a break. I'll just mark this again just now. Let's move this. Okay, so I came to the charts. I realized my price has been bearish basically for the most part. So on the daily, you can see there's this huge bearish move, a retracement. So this could be another leg almost equal as this. So this is just like a general overview, but remember, we always have to trade what we see. So after I got my general bias of where my price is going from the higher time frame, next thing, jump to the smaller time frame, which is mainly H1 to get your confirmation of the intraday directional bias. So when I came to H1, I realized that we had this level from yesterday, an order block here. So all these confluences are coming into play, right? So from this level, if I was looking at it from here, this would have been my break. I would have waited for price to break for me to actually sell, right? But it didn't happen yesterday. So when I came to the chart today, now I realized price came, took out liquidity there. Then, since this was now the lower high from this trend going on this time frame, this became my order block. So price broke that order block. So I could have sold. Remember, I said when you're breaking, it's either you break and continue dropping, or you break and retest. So on this particular example now, price actually broke, then retested. So once you get a directional bias, so you coming from this lower high or the highest high of the day, we broke this level to the lowest low. You just mark your fib. After you mark your fib, the next thing you do is you wait. So price starts to retrace now. We get from here starts to retrace. We get a pin bar right on the 50 and 61.8 fib retracement level. This is all in the book. It's all in the book, right? So after we got that, you can see if you jump to M15 now, my entry was a bit late on this one because I actually saw it a bit late, but I just came through. This was the H1 level. Remember, this is where the pin bar is, right in this point of interest area. We're also on the 50 EMA for those using moving averages. And since this is the lower high, a safe entry can also be at the break of this breaker. That's why I saw there was the word written breaker there. So this is just a broken order block. So price came, we broke, played around that area, then we melted. So this is the other trade I took. I think I only took 30 pips here. I think I closed around the first TP as well. And I was happy with this setup. So again, all this stuff is in the book. It's in the Candlestick Trading Bible. We've gone through it. So what I want to know is, have you guys picked onto something? Because remember, the main thing you want to know is the candles, your doji, morning star, evening stars, those candles. Then you need to be familiar with your higher time frame bias, where your price is going. Once you get a bias, then you come to H1 and you wait for your patterns and your candles where you can run your fib and stuff like that. So just going quickly to the results. Okay, let's see. Okay, so we're going to start with C500 because this was the first trade I took today. This was the first trade I took. Let me quickly show you. Right, there we go. So my trades are executed on the phone. Simple trade, small capital, good returns. So here my risk reward is based on the dollar amount. So you see there was just $34 in this account. And this is the trade. I actually took the account all the way to 100. And I think after this, that's when I closed. So usually my pips are just measured from the first positions because I don't measure the scale in pips. I just measure from the first positions because that's where my trade would have started. So you can see where I showed you my entries. This was the running trades. We made $66 off this trade. Then we were done with it. This was C5. Then after C5, we went to B5 and we went to B1. All right, so let me quickly show you the trade there. Right, there we go. So this is B1. You can see my entries there. I actually had entered earlier, closed the trade. Then I entered again. Then this is the B5 setup. You can see the trade was running in about 40 pips here. Then I decided to scale it out at some point. You see the profit. So you see from that 100 we had made, this one was a bit of a big one. So because I was confident with this setup, is something which we've read, is something which happens more times than less. So my trading edge was present. I just executed my plan, and this was a good trade, as you can see. So this was the B1 and the B5. So what happened with B1 is B1 ended up after it moved, I think I put my because you can see most of my money was on B5 on this particular setup. So on B1, I ended up breaking even on this particular trade. I broke even. Then it actually retraced and took me out at a break even or something like that. Yeah. Then B5 made the money for this particular trade. Then trade management is the trade was running. I had to scale out because sometimes price won't reach your take profits. You simply have to like scale out. So I'm not sure if this is going to show on the screen, but let me just uh, open. You can see. So the 4 lot position, if you are scaling out, I'm not sure if you know how to scale out on mobile. You can see I chose to close probably almost 90+% of the trade here. 3.7 lots of those 4 lots. So I closed this big share, then I left 0.3 running. Then I trailed it at 30 pips. So it ended up getting taken out. Then the profit for this particular trading session today was about what? Let's see. It was about 216. So these are all the trades I took today. I'm not sure if it shows to the bottom. Yeah, there we go. So these were the trades. You can see we started with the small amounts. So I saw someone asking on the internet, like trading, is it skill? Okay, let me change my color. What do you guys think about trading? Is it for you to make money? Do you need to have the skill or do you need to have capital? What do you guys think? Let me know in the comment section what you guys think. Do you need to have the skill or do you need to have capital? Because you can see we started the day small amounts. We're just growing a small account. Started with about 30 plus dollars, just under 40. And we made $216. This is just under 4,000 rands in one trading session or in one day. So this doesn't happen every day. Of course, some days you have losses. Sometimes you lose. Sometimes you break even. But today, just wanted to show you guys that the book we went through, these setups are there. It's all about you actually showing up, being patient, and looking for your setups and executing. The book we went through it together. So I also want to know, how are you guys finding the book? Is it helpful? Do you guys want to see more videos like this? Should we do New York trading as well, because we're also trading on the proper accounts as well? What do you guys want to see? So I'll try to do this on a daily basis, because most of the videos we did, we were just going through the book and showing many examples, but most people want to also see it in practice on a daily basis. So everything you need in trading is in this book. Of course, we'll go through other books. I got a request to do baby pips. Baby pips. So let me know, guys. Do you also want to see me go through baby pips? Baby pips. We want to go through baby pips as well with a few chart examples. It's a big book, so that one will be a bit longer and it will take some time to do. But if you guys want to see it, I got a request from one guy, and I'm sure I'll honor that request. So I just want to know if you guys want to see it so that I can put some agents into going through this book as well. So without wasting much of your time, I think that's it for me, guys. The only thing I can do is keep reading this book, reread it as many times as you can. Everything we need is there. Pin bar candles, everything is there. You can see how to trade all these candles. As long as you know all these candles, then everything else will just fall into place. So I hope this video helps somebody. You can see we're putting this into practice. So thank you so much. If you watched this video until the end, thank you so much. Let's catch up. Tomorrow we've got NFP. So usually I don't trade fundamentals, but maybe we might have a session after NFP. We'll just see how the day goes. If there's a setup, I'll probably record the session, then I'll share with you guys. If there's anything which is in line with what we learned, then we can simply execute. And this is also on my charts. I think I've also mentioned, if you're new, you might be asking what moving averages are they on my charts. So my charts, I've got these. Oh, I also wanted to show you guys something. I'm not sure how long I've been running this session for, because there was a setup also on EU. I did not take this, but it's a setup which I simply wanted to quickly explain. So EU, Coming from the daily, you can see the whole of last month was okay, sorry about that. The whole of last month was a bit bearish, super bearish. Price retrace a bit, and we are still sort of caught up in that retracement. And I've got a point of interest here. So in general, I've got a buying bias. So if I've got a buying bias, I simply need to wait for something familiar on H1, right? So when we come to H1, you see that from Monday's low, price almost went sideways. There's no clean direction, but yesterday we got this nice impulsive move coming up and breaking these small highs here. If you run that fib right from the low to the high, you will see that price then retraced um, back into this area, into the 38.2, 50.0 fib retracement area. So if this is the lowest low intraday, you can see we've got a low here, we've got a lower high here, lower low here, lower high here. So intraday, we were bearish here until this level was broken. So soon as the level is broken, just run your fib. If it's in line with your daily bias, just run your fib and wait. So if you run your fib, you see price then retrace. This was still yesterday towards the close of the day. So since it's towards the close, you can see there was less volume in the market here. Although we had all the candles we were looking for, it was like many of them. So sometimes if it's not clear, we don't trade. But again, what I want to pinpoint is setup still played out. So price came in here, they did push up a bit, then London going into New York gave us this nice push up. So this could have been a nice trade. If you had entered during London, you could have entered somewhere here. A 1 to 3 risk to reward ratio was very possible on this particular setup. Then the other setup I wanted to explain, I think it was GJ. You can see we had a quick one here. Also, we've been coming down for the most part. So this was Monday, this is Tuesday. Tuesday took out Monday's low and we broke a structure. What do we do if we break a structure? Once we break a structure, you want to run your fib, see what you get. So this is an example where price does not get into your point of interest really, but you have to use other confluences which you have. So impulsive move, price retrace. Remember, we're waiting for it to get into 38.2, 50, or 61.0, which of course are also points of interest. But at the same time, you should understand that sometimes price will just break a structure and retest, right? So like I said, if you're approaching a setup, you need to bring all the information you know about trading. So if you were to put this zone here on that high, which was broken yesterday, you see that it now became what? A support zone. Price came tapped. It didn't really get into the 38.2, but we had the 50 EMA right on that zone. We also had an order block from yesterday. I think this was London session. Price tapped. We had a 1:2 risk to reward on this particular trade, and I'm sure we took it, if I'm not mistaken. So let me see if I can quickly jump to trading view. So you can see I just jump around my charts. Other charts are clean. But yeah, it's basically the same thing. So GJ, um, there we go. You can see there it is. This the setup. So this was a London session trade today. The setup started yesterday. So sometimes you have to wait. You simply have to wait for your setup to pan out. Price moves yesterday. We don't get an entry. Don't chase price trying to buy here without proper confluences. Just wait. So there was no trade here. We also don't trade towards the market close because you end up paying swap fee to the brokers. So we don't trade usually open trades this time. We'd rather wait for the next day. So clean entry, risk to reward 1:2, clean play, and it was a good trade. So again, all these things are in the book. All those things are in the book. So you guys, if you haven't read the book yet, make time to read the Candlestick Trading Bible. There's the book. We went through it. Read it as many times as you can. And if you guys want to see something else or anything else you want to add or subtract, please drop it in the comment sections. And yeah, I've been away, guys. I still have a lot of guys I need to get back to. I haven't been ignoring you. I've just been going through some personal stuff, but I'm trying to be back in action now, and I'll be bringing you more knowledge, educational, so that we can help each other grow. Apart from that, I think that's all from me today, guys. Enjoy the rest of your day. Good trading.